Hello, good afternoon. I am Lisa J. Stocks. Thank you for tuning in to this week's Stock Talk episode. All right. Thank you to Nora, Daryl, YJC for being the first ones in so far and chatting. Make sure to go over to the regular side and take the poll question if you want to participate in that. So in today's video, it's kind of just going to be open Q&A, and I'm going to be reflecting on a few questions that I've gotten over the last week. But if you have a question, we can drop it in the chat and we can get to that one too later on. So the first couple of questions that I'm going to touch on are around how often should you review your portfolio holdings, when to sell, whether certain funds like SPMO is the run done as far as investing into them, and combining certain funds, is it too much tech? What is the right fit for choosing funds, ETFs to go into your portfolio? And I got to update this. I see my message here says I'm on the road to 8K, and I have hit that. I thought I had already updated this to 10 because someone told me stop doing it little by little and just put it up to higher amounts. But I definitely have to update that tonight. So guys, let me know if you have any questions. As I said, answer the poll question, and we will take a break and get the update on how that's coming along in a little bit. So let me know in the chat, do you mostly invest into index funds, individual stocks? Do you do a mix? Do you trade? Just an investor? Tell me what are the elements that are a part of your investing journey? I do a bit of it all. And what struggles are you having as far as investing, if any, so that I can take a look back and see what it is that I can share if it's something that I've been through. I love sharing my mistakes and struggles so that hopefully the message gets to others and they don't have to go through it. That's how you learn. If you are a smart person, you learn from others' mistakes instead of having to go through everything yourself. So whether I went through it myself or I've heard enough information, had enough people share with me on a certain topic, I don't want us to make the same mistakes over and over. All right, so now let's get to that first question as to how often should you review your portfolio and decide if you need to sell something. And I tagged two videos where I did deep dives into picking stocks and knowing how to, plan for holding them long term, as well as picking ETFs. But this is a question, and the person, when they ask the question, they put right in there, I know that this is a tough one, but I did answer them, in there. It was someone here on YouTube. I did answer them, but then I said, I'm going to talk about this in my live stream my next time that I go live. So I think it all depends on what you have in your portfolio. And there are some companies, individual companies, that didn't need to be monitored or micromanaged in any way, shape, or form over the last few years. If I did not look at my Google stock, Apple, Amazon, quite a few names that I have in my portfolio, if I didn't look at them for 5 years, when I looked at them, say I didn't look at them since 2020, 2021, when I looked at them now, I would be where I'm at right now, because that's about when I invested into them. I would be up, I would say, at least 75 to 175% on many of my positions, because they've had their ups and downs, but they were strong companies that have been growing over the last few years. And so it all depends on what you have in your portfolio. if I want to encourage everyone, if you are going to be the type of person that invests into individual stocks, think about it on a quarterly basis, that you want to keep up with, the earnings report, those fundamentals, not necessarily getting yourself stressed out that you have to sell because of, they didn't quite beat earnings one time, but just keep an eye on it. The larger the market cap of the company, the less likelihood of it failing and going under and something changing. But there's going to be ups and downs. There's going to be changes to the CEO and things like that. But you have to be ready for some tension. But overall, those are things you can definitely hold long term. But still, check quarterly. Do a deep dive maybe once per year. But this all depends on what you're invested into. When I know what are investments and what are trades when it comes to my portfolio. I really, after dabbling into some smaller companies over the last few years, even pharmaceutical companies, ChargePoint, Jaguar Health, some names that I've shared with you before, companies that have pretty much gone down to zero over the last few years. I know my temperament. I know the type of quality, the type of, investments that I want to incorporate that are not trades. If I buy something and I know for sure it is trade status, I'm going to put a few hundred or a few thousand into this particular stock, then those are things I'm going to have to be on top of. When I put on my stop loss, I think it usually lasts only for 90 days. So if I'm incorporating something into my portfolio that is trade status, I have to make sure that my stop loss doesn't expire and now I'm just holding these shares and it could go down and I'm not cut from the position. And I also have to take into account that if I incorporate something into my portfolio and the share price continues to drop, I have to decide, what is my tolerance? How much am I going to allow this investment to go down? And I'm bringing up that because if you hold shares of an investment in your portfolio for less than a year, the tax implications are different. So you have to be ready for all of this and not just hear about something, want to get into it. You have to know when to get in, when to get out. You have to have a plan start to finish with any type of trading that you're doing, most definitely. I don't want anyone to be turned off to investing or trading because they didn't do it the right way. They had a bad experience. So I like to just talk about it in this way so that I'm just highlighting these things because I want us to be successful. Everything in my portfolio is not green. Everything is not perfect. There have been things that I have had to sell at a loss over the last few years. But overall, those were very rare and, far and few between. And the good outweighs the bad so much more when it comes to my portfolio. When I look at the share sizes of the struggling investments, I can see that, it clicked with me that this is not the right fit for your portfolio, like the 10 shares or so that I have of Target stock or the few shares of Disney that I had. I shifted from those type of companies into the larger NAG 7 companies, or companies that are really significantly large, have that moat, have a significant following, like a Netflix. When it comes to streaming services, Disney, the share price does not show the level that they hold as far as streaming, but Netflix, Disney, those are leaders right up there with YouTube. So those are the type of things that I want to have in my portfolio. I thought that Disney would not have gone the way that it has the last few years, but it's not just streaming when it comes to that company. It's, the experiences, it's the parks and other things that, have weighed it down. So just wanted to touch on that. But I hope I'm giving some insight as to you have to, nothing is a one size fit all thing. I don't want you to stare at your portfolio all day, every day. That's not investing. That must not be an investment portfolio if you have to watch it like that. That is trading. So keep that in mind and don't be stressed out because there are going to be rough periods. At the beginning of this year with the war, with this administration, with everything that was going on, many of my positions out of the Mag 7, 6 of the Mag 7 were down double digits, meaning they were down over 10%. So you have to take what's going on in the economy, what's going on in the news, into account when you're making your plan as to what's going on with your portfolio. If I had, a limitation, if I had those stop losses set on my portfolio at 10%, I would have lost my entire portfolio this year. So I don't have stop losses on my Apple, on my ETFs, on Google, on Tesla. Those are things that I am willing to hold even when there are larger fluctuations than usual, because those are companies that I believe in. Those are companies that have proven themselves and will recover. Tesla is a volatile one, but it's something that I've been interested and willing to hold, even though it might move more differently than some of the other names that I mentioned. So do a check quarterly. Do a check and find out, do a thorough look at all of your portfolios, at least yearly. Keep track of what's going on with your retirement portfolio. And this is not related to this question, but I seem to always want to stress this because I always want to, sometimes I feel like I don't need to say certain things because I've said it before. But I have to, remember that there's always someone new. So have patience. If you've heard me talk about this recently, if if your investing is totally your employer plan, don't just go by what you're defaulted into and think that's the best fit. Get in contact with them, know all of the offerings, have an understanding of the performance. There are ways, there is usually more options that you can invest into other than what you are defaulted into. So have your eyes open to this, be aware, and make sure you're advocating for yourself. This is our hard-earned money that we are trying to grow to take care of our older selves. So no one else is going to do it for you. Don't think that I work at some prestigious company and this and that. And so, I don't need to worry about these things. I'm telling you, if they have a plan on, you sign up and you get into the target date fund that corresponds with your age, they're not going to sit down and, help you and guide you on finding lower cost alternatives with a higher performance. You have to get out there and try to do these things for yourself. And lots of money can be lost. And I just want to share a tip. And let me also say this is not financial advice. This is me sharing my personal insights and my personal experience. And in my videos, I try to be very transparent and show, why I'm talking about these things, how I have gained success when it comes to my own portfolio. And so one thing that I think a lot of people are not aware of is that you don't have to go with the target date fund that corresponds to your age. If you push it out 10, 15, 20 years to be for a younger person, then that would be in line with a younger person's age, then it's going to be more aggressive of a mix there, less bonds, less conservative. A lot of those funds, in my opinion, shift to be too conservative too quickly when you should be capturing those gains and building and growing your portfolio right now. So All right, let me take a quick break. There seems to be about 18 people watching right now. Make sure to take a quick second, tap the screen, close the chat if you're watching from the regular side. Make sure that you've given the live a thumbs up. If you haven't, and you're going to give it to me right now, give me an update in the chat as to what like number you are. Thank you, Chili, Nemo, and everyone that's tuned in. Make sure if you're new here and you're enjoying this conversation, this is what we talk about over here. All things related to finance, investing, budgeting, credit, staying on track, but it's right in my name, Lisa J. Stocks. So primarily talking about the stock market over here. So if you're enjoying the conversation, like, subscribe, hit the notification bell. Check out some of my regular videos that I put out through the week. And for those of you that are already subscribers, hype those videos, get them pushed out, leave me comments, all ways that you can support the channel, as well as joining channel membership, checking out my referral links that are always in the description. Okay. So that was question number one that I wanted to touch on. So not really a specific answer. You have to know what you have in there. If there is something that is, I know when I do one-on-ones with people, sometimes they come with a long list of investments that they have. And I think they just needed to sit down with someone, be transparent, let me be their accountability partner in it and go through each one and say, okay, let's look at the fundamentals of these certain investments. Does it seem like they're going to turn around? Can we, decide on a place to put that stop loss to potentially cut it from the portfolio? Or should we just cut it now at a loss and then move that money into something that is on track for future growth? There's lots of ways to look at it. Everyone's portfolio is going to look different. Everyone has those stocks that they might be holding on to with hopes that they're going to turn around. But sometimes when you take the time to really dig deep, or you sit down with someone else and have those eyes, they can kind of give you that nudge to say, we might as well let this go now and move that money into, as Larry Jones says, like a faster moving vehicle. Why stay in something that is just, broken down at the side of the road, and you're just holding on, and it's not getting you anywhere. So I know it's hard to sell something, especially if it is down, but you have to think about the big picture of moving it into a better investment, just moving forward and not just staying stuck in there, and just taking that experience as a learning experience and then moving, just going forward with a different money mindset, with a different perspective, with different standards as far as your portfolio. And like I said, I've had to do it myself. All right. So now the next question I was going to touch on, and I do want to take a look. Let me see. I think I need to go to the regular side to see the poll question. I'm going to come back to it. Have you guys taken the poll question already? I do want to take a minute before we finish, I'm going to go to the results on what the poll question is. So it's gloomy here. It's cold and rainy for this holiday weekend. Happy holiday to everyone. I think everyone, well, I hope a lot of you might have a day off tomorrow, a paid day off, even if the weather is not good. A little time to relax. So yeah, when it comes to those investments, if the original reason that you invested into them has changed, it does not hold true anymore, don't be afraid to move on and keep that money moving and growing, because that was our original goal, and that should always be our goal when it comes to investing. So now the poll question that I have up is related to selling something and then regretting it, panic selling. Now that I definitely don't want you to do that. like I touched on with the news, with the war fears, with the tensions, the tariffs last year, when we went through everything with COVID-19. We know that there are extreme circumstances that are going to impact our portfolio. So don't let short-term drops impact you to, do something that is not thought out thoroughly and with with intention. So, okay. Let's see. Now, what was question number 2? All right. So question number 2 was on a video, I believe, that I did about SPMO. And I just started investing into that fund in maybe about September. It was late last year. And that is Invesco's S&P 500 Momentum ETF. Let's see. I'm going to share my screen a little bit. Okay, so this is a look at it. It's about $144. And like I said, it's just been a little over 6 months, I would say, that I was investing into it. I've invested at I would say my lowest that I've caught it was probably around $111. I see a low point right here. It was 107.84. So, to see it up at 141, 144, nearly 145, actually, right now. This is on the 1 year. It's up about 37%. Let's see what it's looking like year to date. Year to date, up 21.47%. So I talk about this investments, many others that I've been invested. This one is new, so short term. The growth is very new when it comes to my portfolio, but the thing is, there's others that I invested into for 3, 4, 5 years, like VTI, for example. Let's put that over here too. So I did a video recently and I touched on this because I don't want anyone to think that the gains that I share in my portfolio came overnight. So in this particular video, I was giving kind of a timeline saying, I know you feel like, is it too late for certain companies? Is it too late for certain funds? Is the question that I got from this person with SPMO. And you have to realize, I took a look back, and SPMO has been around since 2015 is the inception date on it. I couldn't get a precise number, but at least I asked AI right before I went live. They said they gave me a range of at least 150. It's definitely more, but I'm going to use that as my reference. It has hit all-time highs over 150 times. I invested into VTI for over 3 years straight. So, my starting point was down in the 200s. I was investing. I did a video on it when it hit $300, which was, that was the all-time high at that time. Now, as of the end of our, close of last week, it's $367. So you have to think long term. Don't think that the run is done, that it's too late for investing. The S&P 500 is at all-time highs. How many times, if you are in tune with what's going on with the news, with these with whether it's funds or individual companies, just think about the big picture. Do some research so that you're getting the picture that I'm trying to tell you here of the all-time highs are coming over and over and over again. The market cap of these companies are growing dramatically. Apple recently hitting $4.5 trillion, and we're still waiting to see more from Apple. We're still waiting to see AI integration, their services growing. We all know if you know people that are, fans of Apple products, how many over the years, how many MacBooks have they had? How many iPhones, earbuds, Apple Watches, all of these different things. So not just that alone, not just knowing the ecosystem that they pull you into, but look back at the growth of the company itself. And um, Google, all of these big names, Microsoft. So we have to think about the big picture and see that we can't be stressed about seeing SPMO going up to 144, being recently, down below 110. This has happened hundreds of times. The stock price has gone up and up and up and up. Everyone has a different starting point. So you just have to just run your own race, know where you're starting from. When I share my gains, they're not going to be in line with your gains. Our portfolios were, you did not invest at the same rate. We did not start at the same time frame. So this person actually, when I replied to them, and just from watching my video, they shared that, thank you for what you shared in the video, because it made them see that that they can't be turned off just by seeing the price went up. Because if it's something that you're going to be, if it's an investment for you, and I like to encourage people to think about at least a significant portion of their investment tied to retirement. So if you're 40, how much longer do you intend on working? Potentially 20 years, 25 years. I know you may have dreams or a plan for early retirement, but think about it like that. If you're going to be investing, holding on to this for many years to come, there's time for it to grow. There's time for it to recover. There's time for you to capture the gains at the rate that you're able to, starting from your starting point, not mine. So I do not think it's too late to invest into certain funds, certain individual companies. It's just a matter of your commitment and finding the right fit for you, and realizing, having a clear picture, make a plan, start to finish, whether it's trading or investing. There's nothing wrong with, don't just think that just because you think it's investment status, you can still put the work into doing your research, having an understanding, so that you know how long you can hold on to this investment, what your strategy is, what your tolerance is if things take a turn for the worst. Okay. Now, the third question that I'm going to touch on is someone asked VUG and SPMO. Those are the two funds that they asked me about. I think I put them in here. No, I put that. Let me duplicate this. All right. So very particular. VUG and SPMO. All right. So someone asked me, these two funds, Vanguard Growth ETF and SPMO, Invesco's S&P 500 Momentum ETF. They said, is having VUG and SPMOs too much tech to build as part of my foundation? And what I said to them is, this is an aggressive mix, but I'm not mad at it. It does give a lot of tech, But you have to remember that SPMO is a momentum ETF. They're tracking 100 companies out of the S&P 500 based on the momentum score. So you're going to get different things in this fund at, every 6 months. It's going to rebalance. It's going to be giving you exposure to those companies that are moving, that are thriving. So at times you're going to be more tech heavy than others. Right now we have, ExxonMobil, Caterpillar, Johnson and Johnson in the top 10, but we have no idea what the future may hold. Now, as far as overlap, you have to do what's right for you. I know I have a lot of tech in my portfolio. I lean heavily into tech, and that is an area that has been thriving. Those are the companies at the top of, that have the largest market cap. You're going to have, your Apple and your Microsoft. Those are the companies that have been leading. So most of what I invest into, whether it's the individual companies or funds, are going to give me exposure. Nvidia, of course, the biggest company. But you have to set your own standard. These two companies, VUG, SPMO, have a 28% overlap. And having below 30% is seen to be reasonable. If you want to make it, less than 20, like I said, it's personal preference. You have to take the time to run the numbers of the different funds that you have in your portfolio to see if you're comfortable with the overlap. And with these two, it's not VUG, it's going to be those growth stocks. So, like I said, right now and for a long time now, mostly dominated by tech, but we do have Eli Lilly up there also, pharmaceutical, but predominantly tech. And I probably will be staying that way for some time. But SPMO could bring something different. So I thought that, like I said, a more of aggressive mix. You have to be comfortable with your age, your risk tolerance, your timeline for investing. But I wasn't mad at this mix as a part of their foundation. Guys, let me know in the chat what your thoughts on these two funds. And the amount of overlap that you think is reasonable to have in your portfolio. So let me take a look back at the chat. And I had another breakup down here of a way if you really wanted to limit your overlap. Like I said, I think that less than 30% is, it's okay with me, even if I do have that tech exposure in multiple areas. I don't mind having extra exposure to Nvidia, Microsoft, definitely not Google. That's one that has really shown out when it comes to my portfolio. But VTI is a total US stock market investment. VT is a total world. And then VXUS is an international. So I was on About That Wallet's live recently, or interview that he was having, and the person that he was talking to, they were saying they have two funds that give them exposure to everything, and I guessed it right. They had VTI and VXUX. So a way of getting the total world without any overlap. Now let's take a look at gives us the average return of these funds. And just at a glance, we can see that, let's look back to like the 10-year, all the years really across the board. 1 year VT and VTI are pretty much, everything's pretty much neck and neck. But when you go out to the further time frames, 10 years back to inception, VTI, which is the US stock market, is the leader as far as the gains. But if you feel you want to have that diversification, I would probably encourage you to do those other international and some of these other areas at a lower allocation than the S&P 500 or a growth stock focus on the top U.S. companies. All right. Okay, so let's take a look at the chat for a little bit and let me know if you have any questions, comments on what we've been going over today. All right. So Daryl says, I have had VUG the longest in my portfolio, and it has done a great job for me. Okay. Okay. Yeah, I don't see how that's and pretty low expense ratio on that one too. So yeah, well, definitely a great way to get exposure to 0.03. So an expense ratio, same as a VOO or a VTI, but to get more concentrated growth companies there, I think it's a great choice. Okay, everybody's just chatting with each other. Hello to Nora. Hello to Daryl. Okay. I'm looking back. Do we have any questions today? Okay, so David is sharing that he is up 21% on SPMO and just got it started in January. Okay. Yeah. Yeah, so they rebalanced in September and then just a few months ago. So after those two adjustments, it was range bound for me for a while there, but now I have to be thankful for that time period that I had to build it up at those lower price points because I'm seeing the gains now, and I didn't turn my back on it because um, looking back, looking at the historical performance. So that's really what was able to keep me on track. And I knew that we were going through a rough period at the beginning of this year. So going back to the VUG and SPMO on the chart over the last 10 years, SPMO is up 537%, and then VUG is up 440%. But SPMO does have a bit of a higher expense ratio at 0.13. And I think it was maybe last Sunday I did a little breakdown on expense ratios, and I had 4 examples of what those fees. You can definitely get on the calculator and do it, but I wanted to give you guys a video, and I reposted it in a video that I did this week and on Instagram also. So, just be mindful of those fees when you're making your decision on what is the right fit for you. Don't chase dividends because sometimes those high dividend yields are going to have you connected to an investment that's underperforming or stagnant as far as growth, even though it's giving you that dividend. And it's one thing for to incorporate a company who's been paying out, increasing their dividend, never cut their dividend for 25 or 50 years, and then something that's new. So, you have to do your research. You have to take your time to have an understanding of these things so that you're not just chasing. You're sure when you are deciding on what is a investment that you can hold on to. Okay, so Chili is saying solid advice on stocks, ETFs, and individual stocks. Quality like Apple and cover quality like Apple versus quantity. Okay. Okay, so let's see what David is sharing here. Always have online access to your 401k to be able to review performance and make adjustments as needed. Yes. Yes, I like that you're touching on that. You need to get a handle of those 401ks. I think that you know, there's a couple of things that led me to uh get so hands-on with my investing journey and want to share by creating this YouTube channel, and one of them is being laid off. So we are living in a time right now, AI, so many jobs are being lost for different reasons, but that is a big one. So, for whatever reasons, we're not our parents and grandparents, where they may have had the stability, longevity to be at the same company for um 20, 30, 40 years. Uh I was laid off after 4 years of being with one company. So I'm saying all that to say that we need to have a handle of our 401ks when we are changing jobs for whatever reason. If it's you're going and applying and, changing cities, changing roles, or those layoffs for whatever reason, we're having multiple jobs, you have to get a handle of those 401ks. Have a plan on how you're going to take care of them. Don't just let them sit at whatever brokerage company that you left off on. You could be just being eaten away at fees because of that. Or maybe you weren't looking at it just in general, even when you were working there. But back to what David is sharing here. You have YouTube app on your phone. You probably have Walmart for your shopping, and maybe some of your streaming services. Have those apps of where your investments are, whether it's Empowerment or whatever brokerage company, Fidelity. I have 2 Fidelity apps on my phone because I've gotten all of my retirement accounts and my daughter's accounts. I have many accounts over at Fidelity, so it's definitely an app I have on my phone. So have a handle of that. Take the time to make those decisions as to, do you want to roll over your 401ks, whatever type of, investment accounts that you may have, to be all under one particular brokerage house, so that it makes it easier for you. But I'm not just saying it for simplicity. I was not having the experience that I have been able to achieve at Empowerment. I'm having a much better experience at Fidelity than I was there, with my choices of funds, my flexibility, the use of the app, the use of their website. There's even one the next town over from me if I want to go in person. So that was the right fit for me. And so I actually had 2 jobs back to back that used Fidelity for my 401k. So I got some hands-on experience with them. And then I said, okay, the other job, I'm going to make the steps to open an account and have those transferred in over here. And these are things that, those brokerage companies are not going to like it. They're not going to like you taking your money. So you have to make sure that you're doing it in the right way. And like with everything else, like I always say, you got to advocate for yourself. No one can come and hold your hand and do these things for you. You have to have a plan. You have to push for yourself, and they might try to talk you out of it. They might, make sure you get it figured out. Don't let it linger. For someone, especially like the way that the market was so down. Let's look at this. I've used this. I showed you this in some of my recent videos. Look at this. It's March 30th. March 30th. Do you see this dip on the chart? This is VTI that I have it on. But if you go to, my individual Mag 7 companies, the shape of it looks just the same, just like this. So this is the time, this is not the only dip in history that we're ever going to see. But for those of us that had changes to make, that had money to deploy into the stock market, don't stop. Just be consistent, stay on track with your investing so that you can sometimes more quickly see the reward of the work that you're putting in. And I'm not saying it's going to last. Things could dip down again. We're still, in negotiations and back and forth with who knows what we'll hear this week about Iran. Okay, so great job explaining to new investors. Thank you, Chili. I've noticed you leaving comments on my videos this week. Okay. So I am back to like 3:15 in the chat. I don't think I missed any. I'm going to come back to the current to see if anyone has any questions or okay, let's see what Daryl is saying. Is there a website that reports gains and takes into account the expense ratio so you can get a true picture of the gains? So, Daryl, I think are you saying, is there a calculator that can give you the gains and like back out the expenses for you and add in the dividend payments, something like that? I'm not aware of any off the top of my head, but you can definitely, if you have a certain scenario that you have in mind, like 10,000 invested into a certain fund, for a certain time frame, just put it into AI. But there might be a calculator out there. I'm not aware of any off the top of my head. Okay, so someone is asking here, VTI versus VOO or both. And I actually have this on my community page right now because it's a chapter in one of my recent videos. And I'm going to go back over to ETF RC to show you the overlap on it. I think it's going to be 88% off the top of my head. Yep, right here. I have a post. So I just posted this the other day, yesterday. So it says, many have asked, VOO or VTI, which one is better? And this is a chapter in one of my recent videos. This is what I named the chapter, VOO versus VTI, which is better? And I think I hear this question like every week. So I just I made this post to highlight it, even though I make videos about it. Like I said earlier, I know I say some of the same things over and over, but you never know who's new here. So I happen to have both. There is no reason to have both. If I was going to choose one, I would choose VOO. And yep, I was right. 88% overlap. So earlier today, we were talking about overlap, and I was saying, 30, below 30 is still in a reasonable range. If you want to be a little more strict, you might want below 20, have to make that decision for yourself. But 88% overlap, there's no reason to choose both. And nearly identical when it comes to performance. Both have the same expense ratio, 0.03. So on shorter time frames, actually VTI has been slightly winning, but overall, when you look at over a large time frame, usually VOO, the S&P 500, is up maybe 1 to 2% more. So doesn't really make a difference which one you pick. If you want the 3,000 companies, you can go with VTI if that makes you feel like I have almost every company, large cap, small cap, I have all of the US, then you can go with VTI, but nearly identical in almost every way. And like I said, I have both. I'm not inclined to, especially in my taxable accounts, I'm not cutting either from my portfolio, even though the overlap is like that. So that the site that I jump on to show you the overlap is called ETFRC. It's ETF Research Center. I don't have it in the comments of this video, but if I remember, I will try to put that there. I did put 2 videos in my video description today, one on helping you to pick individual stocks for your portfolio and one on picking ETFs for your portfolio. But a lot of the things that we've touched on today, but more of a deep dive, especially on the stocks, taking a look at, the debt, the PE, the forward PE, those things that are going to let you know if an investment is on track for future growth. If you're holding it, like I'll probably do some more of those this week, just companies that I'm holding that many people may, like Meta or Microsoft or, other big names, Nvidia even, or Apple. What are they on track? What do analysts expect them to continue? What growth do they anticipate over the next 12 years or so? And I touched on my video that I put out yesterday, which was primarily about Apple and a little bit on Microsoft earnings. My Apple stock finally, it didn't officially cross, but it was right there on Friday, like 99 point something percent up. So I'm almost at 100% gain when it comes to my Apple stock, which is not the most significant growth that I've had on my, individual companies. I'm up more on Taiwan Semi, definitely up more when it comes to Google. I'm up probably about 180%. But, it's nice to see that you can have, and I like to show that it doesn't have to be about trading. You can have buy and hold investments when it comes to individual companies if you're comfortable with that, or funds that are, heavily weighted into these companies, and you're going to be able to capture that growth when it comes to your portfolio. All right. So what are okay, so this is another question that I got this week, similar to it. Well, Anthony, of course, Anthony is going to be talking about the quantum stocks. What are my thoughts on QUT? I think you mixed up the T and the U there. QTUM ETF, since the president talked about it. Whatever the president, Nancy Pelosi, whatever I definitely encourage you to take some time and see what the politicians have. Let me see. I think I actually made a list of this for the live. I didn't know if I was going to get to it. I actually had forgotten about it. Let's see if I can share it. So basically what I was going to say is, no, it's not a slide. I have to try to share. I want to try to share my screen. Okay. So yeah, the amount of trading that Donald Trump, his son, lots of people in political party, in high-ranking political roles have made in 2026 is just mind-blowing. And he doesn't beat around the bush with it. The other day he said, buy a Dell computer. He mentions these companies. He had certain CEOs travel with him to China recently. So what do I think? What are my thoughts on when the president or someone notable mentions these things? I think I want to win. And they are on track. They are winning. So take that into account when it comes to how you are navigating your portfolio. As always, as I'm always stressing, know what is a trade and what is an investment. Be willing to capture those gains while, things are hot if it's something that you're not ready to incorporate for a long-term hold. Be ready for the tax implications too, but it could be, a great advantage to you to go ahead and make those trades and incorporate something different into your portfolio based on what's going on and what is being mentioned and what they are investing into. So I just tried to quickly make this right before I went live. I know another name that's not on this list is like ticker symbol NOW. Those quantum stocks, yes. So what I'm basically saying is that there's a reason why they're mentioning these companies and investing into these companies. And so I think that, it's smart. It's smart to reflect on what they're doing. It's smart to reflect on, like I was mentioning with SPMO and these different, even a fund, not even just individual stocks. History may not perfectly repeat itself, but as they say, it often rhymes. All we can do is use it for our judgment, just like with anything else. You're going to do your research. The stock market has been here. Apple has been around for a long time. There is, don't just think that you have to do something blindly. Do your research, find what you're comfortable with. I think it is very smart to invest the way those big whales, as they say, go about making their investments because, like I said, they're winning and I'm in here to win too. So some large cap companies and AI companies that Trump has traded in 2026. He did a public disclosure recently, and I mean the chart was this the investments that he was making in prior, even last year, his investments that he made in 2025 versus the bars that were on the screen, that were on the chart for his investments in trades that he made in 2026. I wish I had a picture of it handy to show you. It is extreme, the amount of investing in trades that he made and recently disclosed. So he's taking investing differently. His son is too, they're on track to make their millions into multi-millions, be billionaires. So nothing wrong with that. I want us to all do it on our scale. And, it doesn't seem fair. I'm not talking about what's fair and what's right. And, I'm not trying to get into anything political, but even the list that I just had up, Boeing is on the list. We knew they know more about what's happening, and what they release to us may not even be in line with what is actually happening with the Straits of Hormuz being opened and the negotiations that are going on with Iran. We don't truly know what's going on step by step behind the scenes. Okay. All right. I just shared on my community Thank you for sharing me out, Daryl. I appreciate that. I don't know if you're still here or if you're gone to do your volunteer work. Oh, Anthony gave me a share too. Thank you. Thank you for the support. Okay, so I'm going to go back and see. I'm going back to the current. Okay. How much do you think ethics plays into your buys? Nvidia seems tempting, but they are a company behind the push of data centers destroying our local communities. Okay. I can't say I invest into the S&P. I don't it would be it would be hard for me to try to. I'm not incorporating anything any much related to ethics when it comes to trying to avoid, say, tobacco companies or alcohol. Certain. I'm not trying to avoid anything when it comes to my investing. To tell you, to be, honest and transparent. Nvidia. I know that it's going to take a lot of water, a lot of resources in order to have these data centers, but I'm not trying to avoid investing into Nvidia or Amazon or any of these names related to Amazon Web Services. These different things that these companies are involved in. I don't think that I can impact it in order to improve that. If you think that you want to take on that responsibility of avoiding those investments in your portfolio, like I always say, investing, personal finance is a personal choice. And that is not something that I'm really weighing into my investing strategy. And I would be hard pressed to try to avoid certain companies because they are the highest weighting in many of the funds that I'm invested into. If you're here, Sleepy Rod, I hope I answered your question. All right, I'm just taking a look back at the chat a little bit. Thank you for answering in detail. We appreciate all that you do. Thank you for being here and chatting. I don't know what question I was answering at that time. Again, thank you guys for helping to get me to 8,000 subscribers. I will be updating this. Hello, Marketplace Boutique. Lisa, do you have any Fidelity Select semiconductor in your portfolio? I do not. I decided to go with SMH, and I do hold that in one of my portfolios over at Fidelity. Who is this? DOS Mike. Thank you for tuning in, and I'm glad that you are learning. Make sure to ask any questions. I've been here on YouTube for over 3 years now. So guys, even if it's unrelated to the video, there's something that you're looking for that I can help you find, or if there's something that I can include in an upcoming live, feel free to leave me a comment, okay? Going to InvestFest. No, I have no plans on traveling to InvestFest, and I've never been to InvestFest yet. I've only been to FinCon and Vid Summit. Okay, Rod is still here. Okay. Rod, it's not that I'm trying to say I definitely care about the environment and all of that, but I don't know that that's a battle that I'm not trying to take on as far as my investments. All right, I'm taking a look to see if there's any questions. I don't think I missed anything. Inside trading and greed. Yeah. I'm doing good, Fear Brooks. Thank you for coming in. Okay. So guys, let me know if you have any questions. I need to be at InvestFest. Yeah, Maurice. Hopefully I get there one of these days. But yeah, I'm up north. So yeah, Atlanta is not anywhere near for me. Yes, money nerds unite. They say about people going to FinCon, and Anthony and I were actually at FinCon together, and I did travel for that one because it was in Orlando that year, but we didn't know each other back then, so he didn't seek me out to take a picture with me. That's just a little inside joke. Because he was saying one day, like, "Oh, I took a picture with this person and that person." I said, you didn't come and ask to take a picture with me." All right. Okay, I'm not seeing any questions in the chat. I hope you enjoy today's live. Maurice, yes, I replied to your comment, Maurice, and I told you to reach out to me via email. So if you haven't done that already, I can share my email to you in the chat if you didn't see my reply to you. But yes, I do mentor, I do one-on-ones, I do have channel membership. There are ways for us to connect, okay? But if you could send me an email, I'll be on the lookout for it. Anthony, you laughing at me? So guys, I came across, yes, Aunt Maurice, please do reach out to me and we can make a plan. We can set up a 15-minute consultation if we want to just have a quick discussion to see, what fit might be a good fit for you. So reach out. But I did reply to one of your comments from the last few days on YouTube. So guys, I was looking at looking back on some of my shorts on YouTube, and I came across a short with Anthony, and Anthony asked me what my dream job was. I think that's Anthony. That's number 2 on the list of most enjoyable questions on the About That Wallet podcast. And the first one is what dish do I was my favorite dish to cook? I've gotten some questions in some interviews, guys, and I had to, I had to put on a fake smile and make a nice, nice answer because I was like, man, I don't want any part of this question right here. Okay, really, this is what we do on Sunday. This really, I don't know. He lost me with that one. Okay. All right. So guys, I'm not seeing any questions. I can go on to bonus topics if you guys want to do that, but let me know. Let me know if you have any thoughts on what I shared already today. Are good ESG ETFs on Vanguard? Okay. So are these funds that you're sharing here that are ethically in line with what our viewer was sharing. Let's take a look at them. What do we have? VS. That's an international fund. And ESGV. I'm not familiar with either of these two funds. Environmental, social, and governance. And governance is what ESG stands for. Okay. So who was that? Rod? Not investing with Rod. Sleepy Rod. We have a couple of funds that Anthony has mentioned here. Let's see. So we have VSGX. Did I put these in correctly? VSGX and ESGV. So both Vanguard funds, but it has that environmental, social, and governance piece in them. So an international fund and a U.S. stock fund. So something for you to take a look at to see if these are in line with what you want to be invested into. And wow, taking a look at this, this ESGV has those big names like Amazon and Nvidia that I thought you might be trying to touch on, wanting to avoid because of the data centers and the water usage and the draw on the environment. But even all these names are familiar in that fund. Now, Taiwan Semi, Samsung on the other side are also ASML. Okay. But something to consider. All right, so I'm going to wrap it up for today. Make sure to check out the videos that I have linked in the live stream that, like I said, can give you a quick breakdown and more in detail as to how to go step by step with evaluating your individual companies that you may want to incorporate into your portfolio. And then there's another one on ETFs. If you feel like you want an update on either one of those videos, let me know. Leave me a comment. And like I said, if there's any topic that you aren't able to find on my channel, leave me a comment there too, because most likely I can find it easily for you. And it's so weird when you have to be live and you can't edit out any mistakes or any, when you get a little tongue twisted. But anyways, make sure to check out my referral links, the MooMoo Investing app. You can get 8.1 APY on your uninvested cash. I use it for research. I use it for investing. That's where I'm building up my AMD, my Microsoft. That's where I'm holding some of my dividend paying investments. So check that out. Click on the link. You can, take a look at it, and you want to move forward, fund your account, and that's a way that you can support the channel and support yourself in having more flexibility by having another taxable account available to you. I am a Crown Trader over at KGU, which is Keenan Grace's Discord. So if you are interested in learning more about options trading, that is the place to be, as well as more access to what I share concerning long-term investing. And also, you can become a channel member. I do live streams from members upon request. Sometimes I just pop up and check on them also, but we can have live streams just like this and, get more into detail. Your questions will be prioritized, but it's also a way that you can just support the channel in general. So you can click on the link for that and get the details. And Maurice, make sure you send me an email if you want to set up a conversation with me. So I will see you guys next week. I try to be here live every Sunday at 3 p.m. Eastern Standard Time. And we are going to end today. Make sure you like if you haven't already. Hype my videos throughout the week. Leave me a comment, leave me a comment. React to someone else's comment. Just let's keep those conversations going in the chats or in the comment section of my videos. It helps with engagement. So I appreciate y'all's support, and I will see you next week.
And to investments, she make a lot on YouTube. Lisa J Stocks. Lisa J Stocks, that's the channel. Hey. If you wanna make some money, visit Lisa J Stocks. Yeah, you will make a lot. If you wanna make some money,